Hello, 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 everybody. Mike Arnold here, co-founder, Pat Trading Partners, along with Bob Iacchino. Good morning, everyone. Good morning, Josh. Good morning, Wavy. Good morning, Options 22. Good morning, Jacob. Good morning, Wavy. Again, Nasdaq giving back 150 points so far. Not much based off the rally we had yesterday. Watch to see if 13.2 area can hold. Good morning. You expecting more of a run or consolidation move? I will go over that in a bit, Ken. Good morning, Sterling. Before we get started, by the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term viewers, leave some comments like you've been doing and smash that like button. There we go. I had to do the YouTube thing, which really drives me crazy. Just click on the like button gently. Just something that might have been missed today. We had initial jobless claims coming in slightly higher than normal, continuing slightly lower, but this caught my eye. Non-farm productivity dropping more than expected, but the unit labor cost preliminary up a lot more than expected. That's very possibly stagflationary, and I still think the Fed was dovish yesterday, so we shall see. We shall see what happens with that. Don't even need to start looking at the June stuff yet. By the way, we're still slightly in negative gamma territory. And for earnings this morning, we had Shopify, which when I looked earlier, was down again. And again, that's down against the rotation zones. So keep that in mind. I would not be trying to grab. There's no great bottoming pattern yet in Shopify. It could keep going down. Sorry, I was looking at crude. We normally don't start off with crude, but pullback in the S&P so far. We'll get to that in a second. Hello, William. 3 hellos from William. Shop new yearly lows. Terrible earnings report. I did not specifically look at their earnings report. Mike, TA on the Qs, please. My time intervals are giving me different numbers. We'll get to that in a second. So pulling back, remember, still in the S&P rotation zone and rotating back down. This morning I was watching this little 1 hour, we had this little topping pattern here, broke down in the European session and now starting to break down below the 1 hour. I'm still going to watch for this closes, but on a bigger pullback, remember, we got very, very strong rally today. Cycles on the 4 hour just rolling back. So my first area I'm watching for a pullback to is 42.45 to about 42.41. If we drop below there, let's see. If we drop below there, then my next key area I'm watching for support is 42.11 to 42.16. The only challenge with shorting stuff up here is it's really tight for reward to risk. We could get this little rollover move, but what's interesting is cycles still have not topped on the daily, even though we're into that rotation zone. I'm watching for them to roll over, and weekly is still at a low. So yes, we could get this slightly bigger pullback. I think the pause is off the table. Now I'm watching with this breakdown move for the slightly bigger pullback, and then I'll be watching for reversal or bottoming patterns. Again, what invalidates my short-term watching for further push up, and that doesn't necessarily mean today. You can get a pullback day. We can get pullback here and then remain choppy. Yesterday was an extreme afternoon trend day, so now it's working off this very overbought condition. What would invalidate that whole thing is not till we got the close below 41.48 area. So it could, you have a lot of pullback areas. It's just tough unless there's a great pattern in here to short, because there's lots of support levels in here now. So I'm still watching with those cycles being on the weekly. Just to recap on the S&P, still trying to turn up. I'm still watching for some higher price push action, or at least choppy to slightly up after we get through this pullback this morning. Nasdaq, again, daily cycles at the top, but not yet rolling over in the rotation zone. Confirmed as double, but does not trigger it on a closing basis, so it can be traded higher Okay, but again, you have stopping points still above here, and we're getting that breakdown from this rotation earlier topping pattern in Europe, holding that 1 hour, now breaking down. So what everything's, we've got conflicting positions back to that 1 hour, that 4 hour rotation zone, which is turning lower. If this area of 13,344 does not hold, I'm targeting 13,238.50. Things are a little cleaner on the Nasdaq this morning. And then I will be watching support. If we drop below there, my major support area you don't want to see broken, even though on a closing basis it's down here, on a support basis. So this was major resistance before the Fed and the 50% level. And right about here, a significant level, which is roughly the 50% level. So 31.37. If we got accelerated moves to the downside, there are some potential little short scalps in here, but that would be my major line in the sand. Why? Because that erases the afternoon Fed rally, comes back to that 50% level, then I will really be targeting that 62.5% level, and that's right around 1330. Now, if we do get some momentum going into I'm expecting more of a choppier day today, with possibly a slight upward bias if we can get some kind of bottoming pattern coming in either this area or the next area lower I talked about. So I will be watching for that on the shorter term charts. Push higher. Again, for intraday trading, I'm watching this 13,665 area. We have a retracement harmonic and a projection harmonic there. Then 13,766, then this 13,912. Those are all the levels to the upside. Why is this difficult still now? Because we're still in tactical trading mode. Anything can shift on a moment's notice in these markets, especially if we get momentum bars. Since we have confirmed but not a trigger on the daily or the 4 hour basis with this, it got close. Did that? See, the trigger for this double was 13,542. The close here was 13,541.75. I had to do it. I forgot if that, I had a momentary lapse of reason there. So that did not close above this, and this could be a 4 hour close on the day, on the 4 hour. I closed on the 4 hour above that level, which did not. It missed by a quarter point. So it did confirm it because it traded above that level, but it did not close. So if it had closed above that level, we would have had greater probabilities for upside. It's confirmed it. So we do have above 50% probabilities for continuing upside. We actually have above 55% for continuing upside. That's why I have to go, but I wanted that close to really give me more favorable odds. Hey, Christoph. How are you today? Good morning, Amit. So that's what I'm keying off of. For Nasdaq, right where it is now, going in the open, watching for possible rotation move up. If it drops back down, my next level is 13,239. Dow, again, the pullback here on the 4 hour. I don't need to go through all the cycles. They're pretty much the same, about 33,620 to 630. If we drop below there, I'm not going back to the 37.5 yet. I will watch about 33.5 for a potential bottoming pattern, and then I will go back to 33,415. So those are the areas I'm watching for potential reversal patterns as it works off its overbought condition. Dow doesn't have a great daily pattern. Did close above the daily rotation zone, and now just pulling back. Keep in mind, oops, didn't want the monthly. Keep in mind, all these markets are still against the weekly rotation zone. So on pushes higher, I will watch for further progress into those weekly rotation zones. And again, with all these, as weekly cycles are at the bottom, does that guarantee it has to go higher? No. But here's the thing. If we close below those key 62.5 from these bottoming moves up, then that would really be major market weakness and give us some substantial short-term short patterns. Russell, pretty much the same thing, rotating back down at the daily rotation zone. Key levels if you are trading the Russell. Minor is about 1921, majors back at that 1905 to about 1910 level. DAX coming up to the next target, the harmonic with the 50. We've hit that and reversed lower, but DAX still stepping down slowly lower. I'm still bearish longer term on the DAX, finally poking into the weekly rotation zone again. So I'm just watching for potential short setups in here. Crude, nice push higher. Let me show you this on the shorter term chart. So again, we broke above. I was watching this 108.03. Pulling back to the candle bodies here with the 8 pushing the price. Rising up, little divergence, pulling back, same key area. So between the high and the candle bodies, getting that support and then rotating up. So this is an area that you could use, again, for what you should study. When you break above a key level, and I love to use between the candle bodies and that key high, with the rising rotation zone, and you can see this was the 1 hour, here's the 4 hour rotation zone. And what's this concept? This is 8 pushing the price. So it's basing at these highs with the 8 coming up. And now we just got that breakout play. That was a fantastic play. And look at the harmonics we already had on there. And look where it's pausing right now. This 111.20 area. We already had that on the charts. Go back and watch the levels. So the next level is 113.27. And now pullbacks. This is the area I'm now focused on. For if it were to pull back, major support is 108.60. So that can be used for stop placement. Let's see. Welcome, Chris. Thank you for the super chat. If you had to play Tesla options today, what would you play? We'll take a look at Tesla in 1 second, okay? And I know Ken bought Tesla at 877, looking to play it long, but don't want to get caught with a loser. Is 938 a good place to take half off? Again, I'll look at key levels. I'm not going to specifically tell you what specifically to trade, because then I'm giving trading advice, and that gets into the gray area. We'll get to Tesla. Well, let's just jump to Tesla now, and then we'll get back to the Qs for options 22. So it's a little gap down. Again, see, we're at that daily rotation zone. We talked about this being the level yesterday. If the Nasdaq turns, then I'm really focused on a break above yesterday's high to the major resistance coming in at 975. The support level, let's just go through this so you can do your own analysis. Now you see resistance. Let me bump this up. You have resistance that it broke through. Resistance, let me even get down to the 15-minute. So the first area on a pullback, we're still way above this. The first thing with the gap lower, I'd be watching for that gap fill, because Tesla's notorious for that. You don't really want it to start getting below this 926 to 929 area, but it doesn't really get into a further pullback unless you start on a closing basis getting back below about 917. Okay? You are above the 4-hour rotation zone, so that would be my key pullback area I would focus on. To the upside, again, besides this little gap play, the next area that I'd be looking from a personal standpoint to lock in some profits is this 974, 975. This was prior major support becoming major resistance. And we've already hit a key area, which we're pausing on the 4-hour. You can see the 50 and the 200. So not surprised to see a little pullback, especially with the Nasdaq weakness. So, and against the daily rotation zone and the 50. So it's got some heavy lifting to do here. If you want to be cautious and you're already long, let's see, Ken, you were already long at 877. What I would be looking on is if it can't get that gap fill play and rolls over, to potentially lock in something and then start moving up a stop. I mean, it's got a long way to break down before you got 877. So would not get concerned until you started to see it below this 917. So easily I'd have my stop at break even at this point, looking to lock in something. If it does immediately, that gap fill off the open, then and starts rallying higher, then I'd be targeting that 975. So those are the key levels, Chris, for any options I would be playing would be based off the upper area on the 975s. Those would be the first key area. If we do rally through that, your problem is you have a lot of stopping points in here. Your next area to the end of the clear path move would roughly be back to 997 to 1,000. So that would be my upper short-term boundary without another pause. All right, let me get to the cues for options 22. Remember, we finished that double yesterday. We've had this strong push higher. Of course, you're going to gap down today because the futures are lower. You don't have... this is a really ugly head and shoulders, so I'm not putting it out there. The area, the key pullback area for me on the cues is 320. Right now you're sitting 325, which is the 25% harmonic. The next pullback area, if we get weakness into the open on the cues, I'd be watching. You see the 1 hour rotation zone with this prior resistance level, which is still on here, and now was resistance yesterday right before the Fed meeting. Now support with the rising 1 hour rotation zone. So anywhere 322 to about 322.50 is my support level if you break down 325. The area you don't want to see a close back below is about 317.50. For your push higher, you're right against, it closed against very key resistance yesterday. You see this, very key resistance here on the closing basis, here on the 28th, and now pretty much closing right at that level. So on the rotation back up, my first target would be 327.60. Then I'd be targeting 330. If you can get above 330, if we can get that longer term, you know, even with this pullback, that longer term, still watching for another pop higher, you are into a clear path move higher. And this is for this is not necessary for today unless we got another power move. But this is once we get back above that 329 to 330 area, you're into an advanced clear path move with a target of 335.90. And let's just see where the harmonics take us. And look at that. So intermediate, I would use a stop reduction, prior retracement harmonic and forward projection harmonic, 332.95, roughly 332.85, 332.95. And then look at this, breakdown zone, advanced clear path move, harmonic 335.44 to 336 area. There you go. There's your upside and downside and key levels you don't want it to drop below. And where I'd be watching for pullbacks. Mike, just so I get it right, if stock makes a big move and stays above its 25% level, favors higher prices, pullback to 50, then bounces possible continuation trend, close below 65, retest. That's pretty much. When it can hold that 25% level, especially on a closing basis, like a 4 hour closing basis, you can even more aggressively the 1 hour, then it favors the higher prices. Why? Because it's basing at the top. It's basing at the top, and that's considered, see where it's holding right now? This is just a normal pullback move. When you get a power move like this and it bases at the top within the 12 to 25%, that's just a normal pullback after a power move. You start breaking below there, then I watch really for the big 50%, but I will watch that minor, as I said, because of the rotation zone on the 4 hour. I will watch that 37.5% harmonic. What happened to my other line here? There it is. So you see this 12.5, this 25% right at that 4 hour. We break below this though with momentum into the open. If there's no momentum, it's just chop. I will wait to see if we get a 1 hour close below there. If we pull back with momentum, then I'm watching the 37.5 at this instance. Why? Because you got the bottom of the rotation zone, but your major support is back at that 50% level. ALB beat on earnings and revenue last night, is up 15% pre-market. We had a weekly head and shoulders that hit the first target. Is the head and shoulders still valid? If not, thoughts on going forward? This is a massive head and shoulders pattern. It is still completely valid. You also had this little double pattern which completed. This, again, I would not start getting concerned about this. I've actually modified over the last few years more so the way I trade it, but I would not get concerned on a long-term basis from a short perspective until you get above 246. Okay? Why? Because until this has a lot of heavy lifting to do, it beat. All right, but this is potentially another rollover play. It finished that double after that first target, coming back down. So there's a lot of resistance. 230 would be a really cautious level for me to watch, though. Why? You see here, key close, and look at that 62.5 now with these spike highs. So could it even get higher up in here and roll over again? Yep, that's what I'd be watching for, potentially longer play. Your weekly cycles are at the bottom and trying to turn up, so you could get the push higher. It's in mixed messaging now. Your daily are at a high. And you have a lot of major resistance to work through, and the 200 still above, which is an area right by this prior high area. So could this easily push up here and then roll over again? Yes, and the head and shoulders are still in play on a very long-term basis. This is a long-term top, not a short-term top. Good morning, Lauren. I won't sue you. It's not about suing me, Chris. It's about there's liability with stuff, especially since I was professional status and everything else. And I want to give people levels so you can construct, because I'm not here to sit and call out your specific. I don't know your account size. I don't know your risk tolerance. I don't know your risk per trade. I don't know your time frame. You know, you can say, what are my options play? Are you trading weeklies? Are you trading the monthlies? I can't know all that without a ton of interaction with you. So I can call out levels. I can say what levels I would be watching on breakouts. I could say you could use the levels to structure options contracts. Like if I say the 975s are key levels, that could be an area you want to look for a strike price, especially if you're doing a bull call spread. That could be the upper boundary of a bull call spread. But again, I don't know everybody's stuff. Options 22, I know has very large account size and trades very big. And another person might have a $10,000 account size and trade very small and have a very small risk tolerance. So I can't design trades for everybody because I don't know enough about every individual, and that would take individual coaching on a regular basis and working with you. So that's why I'm hesitant with giving out. I just can't say this is a buy, this is a sell, this is how you should structure the trade, because for one person it might be way too risky, for another person it might be way too conservative. Good morning, Paul. And that's where I don't like where people, you know, if there's a service, like we have the stock think tank, which we're going to ramp up even more again in the future. And that's designed for a specific type of trading. And that would be different if I released a core trade around a core trading style. That would be a different service because that would be laid out very differently with how we're executing these trades than like a stock think tank, which focuses on value plays. So again, there's different nuances to different trading styles. How's Nvidia looking today? Thank you for asking. Nvidia is down in the pre-market slightly. Again, you watch for it confirm that double where it would be completely off the, you don't want it on a intraday basis to get below 187.50, on a closing basis below 189.80, 180. Sorry, let me get you the level. 189.82. Other than that, it's just a pre-market pullback. By the way, AMD, you see, I mean, it gapped up with the earnings. So this, I just wanted to show you that target that hit with AMD, and now it's pushing higher. By the way, AMD, the next target higher is about 101.50. Where else do we end phase? Ooh. Well, that's off the table because it closed there. That's a choppy mess. Again, you get the close above 193.26. Favors a retest of these high levels, but until there, I mean, this is either a breakdown or breakout play at this point. Key supports really with this area between about 186 and 184. If you break below that, I'd be targeting 175. A break above this 193, just go to 193.50. You got resistance 197.50, and then if it closes above there, then I'd watch for a retest of this higher area. Let's see what else. I'm running into the open. Oh boy. All right. Well, notes. That's why everything's going to slow down on this. Notes coming back to retest the lows, but on a daily basis. Still, we're against the rotation zone. I'm still watching for that longer term bottoming pattern unless we break down 117.21. Let's check in on the VIX. I know Ken put something in on the VIX here. And up pre-market just a bit. That's nothing to worry about unless what would now make me, again, right at that 62.5, what makes me get a little more concerned on a sell-off? We're up slightly, but that's nothing. I mean, we'd have to get back above about 32.19. Again, we could just be pausing. Don't focus on every little minute detail on this. Let me just check in. So we have, let's see if we got some momentum going off the open. Yeah, we got some momentum off the open. So if we don't get a quick turnaround play here, I'm focused on that 13,240 in the Nasdaq. Dow looks, I mean, the S&P looks like it's getting a little momentum off the open. I'm going to have to wrap this up shortly. Come on. This starts slowing down into the open. That's why I like to use my trading platform. Right now, still against this key support area. But we break below there, then I'm really then focused on this 42.15. So I have to shut this down for now. And I will be back. So if I didn't answer your question this morning, please consider tuning in this afternoon and we can review anything I get to. I got to jump and get to the live trading.